and Arundathi Ramanan report that, listing aside, SEBI has had its hands full with issues like opening up of stock exchanges to global investors.
There are some, but we are hoping to resolve that very soon. It will happen very soon. Yes, the work has started.
The market regulator has its hands full when it comes to creating an environment for the listing of stock exchanges. But Chairman UK Sinha says it will happen sooner rather than later. Experts say slow movement is understandable since the rules need to go beyond just listing of a stock exchange. It involves creating a way for private equity investors seeking to exit their investments. It's about writing in clarity in the current stock exchange and clearing corporation regulations, and it's about tightening the regulatory framework of exchanges.
Should they do self-listing, list themselves or on their own basis? That's a tough question, because that will have problems of being a judge in one's own cause if there is a regulatory violation. But some safeguards ought to be put in place, one of which is that the business piece and the regulatory piece must have very strong Chinese walls.
One other big area that needs to be addressed is whether global stock exchanges should be allowed to buy up to a 15% stake in domestic stock exchanges. Currently, FDI guidelines do not allow global stock exchanges to acquire more than 5%, while domestic stock exchanges can buy up to 15% in another stock exchange. Now, some experts say allowing greater participation by global stock exchanges will help domestic stock exchanges, but some stock exchanges disagree.
Global stock exchanges should be allowed to own up to 15%. I think on the one hand, we argue that we want these global exchanges to be part of the Indian sort of ecosystem. We want them to bring technology to the Indian exchanges. We want to see best practices from around the world. But nobody is going to be incentivized to do that if there's a 5% shareholding limit. So I think there are very good reasons to make for why the shareholding limit should be sort of enhanced to 15% or even higher for these investors.
Indian exchanges, NSE, we would really match up in terms of technology, costs, products, etc. to any global exchange. So I don't think there is a deficit for knowledge or technology or capital in the exchanges sphere. So the reason for bringing in a foreign exchange into India cannot be any of these.
Now, as NSE and BSE gear up to allow listing of their exchanges, SEBI will also have to resolve some of the tricky issues with respect to fit and proper regulations for all shareholders and tweaking several regulations to make the process smoother and the environment conducive to growth. In Mumbai, with Navin, Shetty, Arundathi, Ramanan.